Hey guys, welcome back to my channel. If you're new here, my name is Denali and I am a full-time online reseller. If you're not subscribed to my channel and you'd like to be, hit the button down below. And if you enjoy today's video, give both of us a thumbs up. So today I am joined by my dad again, who is a CPA and my tax professional. This is a follow-up video to one that we published a few weeks ago, answering some tax questions and also talking about tax changes that are happening for the 2022 tax year. So go check that video out if you haven't already. But a lot of you guys had a lot of questions, which we tried to answer in the comment section of that video, but we did choose some to answer here today. Again, my dad is my CPA, thank God. But do please seek the advice of your own tax professional when it comes to handling your taxes each year.
Good idea.
Can't go wrong with that.
Good advice.
All right, so here we go. First question that I have for you. Do I need to know what cost of goods I have on hand at the end of the year 2021/beginning of 2022?
The answer to that is yes, but like everything in the tax world, it gets more complicated and involved. The items you have on hand at any point in time or at the end of the year, the IRS refers to as inventory. This is your inventory of goods. Now, for a lot of small resellers, you might start out, you buy things and they turn over pretty quickly. And you maybe don't have much at the end of the year. But once you start having a substantial amount of goods on hand at the end of the year, you're going to have to account for it. Now, the Internal Revenue Code, in fact, requires you. It says if your business is depending on selling goods versus selling services, then you have to account for the inventory. Now, for larger companies, and particularly manufacturing companies, this can get pretty involved because you can imagine somebody who builds something or produces something. Well, the IRS says the inventory is the cost of the item, it's the labor of the people involved in making it, it's even your overhead, some prorated portion of your insurance and rent and utilities. Now, there is, however, a special rule for what are called small business taxpayers. So if your sales, your average sales over a 3-year period are under $25 million, which I assume is most people watching this video, then you're going to qualify for this small business exception. What the small business exception says is ignore your overhead, ignore any labor, take only the cost of the items. And so at the end of the year, you should determine what the cost of the items are on hand at the end of the year. And they go into what's called an inventory of supplies, and they don't get deducted that year, but they get deducted the next year when you sell them. And you do this every year. So at the beginning, so let's say in 2022, the things you had on hand at the end of 2021, you can now deduct in 2022. But the things you have on hand at the end of 22, they roll over into 2023 as far as a cost of good.
Okay, cool. Well, good to know. Next question is, can you only file for deductions if you have an LLC? And then they said, for example, mileage, cost of goods, etc.
Absolutely not, right? There's different ways of doing business. You can be in a partnership with someone. You can have a corporation, or you can form an LLC. Now, the thing about LLCs that people don't understand, the LLC is a legal form of doing business. It's not a tax form of doing business. Mm-hmm. So I can be a self-employed sole proprietor, but I can run the business through an LLC. Okay. And the advantage of doing something through an LLC is it provides some liability protection for you. Okay, so that's the purpose of the LLC. So it doesn't matter whether you have an LLC or you don't have an LLC. If you're just a self-employed person, you qualify for all the same expenses and deductions as anybody else.
Okay, so if you don't have an LLC, just to reiterate, you don't have an LLC, you don't have a partnership or a corporation, you have none of the above, you can still qualify for deductions.
Absolutely.
And is there a place that a small business owner should go to, or just something they should Google, like small business owner deductions? Just put it into Google?
You could do that. You could do that. There's lots of books that are published, probably actual books or online these days, that'll tell you what you qualify for.
Okay.
And you can even get publications from the IRS.
Oh, okay.
The IRS has dozens and dozens of, 100 book publications. Some of them are excellent. They tell you everything. Now, a little piece of warning here about the IRS publications. They tell you the view of the world according to the IRS.
Okay.
Right? So maybe the IRS says, well, you can't do it, A, B, and C.
Okay.
But people have challenged the IRS, and the IRS has lost in court.
Okay.
the IRS is not going to necessarily tell you they've lost in court.
Oh, okay. Got it.
So, but there's lots of great publications the IRS puts out on this.
So any tax tips that you have for small business owners to prepare to buy a home?
Well, I think what you're getting here is like an office and home issue, right?
Well, yeah, maybe. I mean, I think sometimes I hear with small business owners, that being an entrepreneur, maybe it's harder to qualify for a loan or stuff like that. I don't know.
Any new business has a hard time qualifying for a loan.
Okay.
Let's be honest with you, folks. I know a lot of people in the banking industry. It's a great business. But if you walk in the door and say, I just started my business a month ago,
right.
The banks will say, congratulations, but they're probably not going to give you a loan. Okay. So you probably have to have, I'd say, 2 years under your belt at least before most banks
will consider
any sort of business loan to you.
Got it.
But so let's say you're buying a house. Well, one of the issues that comes up is having an office in your home. And you can qualify for an office in your home. It's totally legit. Mm-hmm. It's a good idea. I've done it with clients lots of times over the years. And there's two ways of approaching that. One way is you can say, well, there's 4 rooms in the house and I use 1 room for just business purposes. So 1/4 of my insurance and utilities and all that, or my rent, is deductible. Or the other way you do it is you say, well, the house is 2,270 square feet and I'm using 450 square feet. You just divide one, by the other and come up with some percentage. 19% is, let's say, your percentage. So then you take all your utilities, your insurance, your mortgage interest or rent if you don't own the home. You take everything times 19% and those all become business expenses.
Okay. Somebody says, elaborate on the term, it's a business expense.
Okay. What's very interesting about the tax code, see, I started back in the day when we actually had these big thick books sitting on the library shelf versus everything's online these days. But anyhow, the tax code used to be about 2.5 feet tall.
Okay.
Of small print.
Okay.
Amazing detail. The smartest person in tax doesn't know half of what's in the tax code, right?
Okay.
But what's really interesting is there's one section in the law, Code Section 162, that says you can deduct the ordinary and necessary costs of conducting a business. I mean, that's it. There's like 2 sentences
Okay, that feels generic.
It's absolutely generic.
Okay.
Now, and so basically, it really comes down to, do you need to pay this item for your business, right?
Yeah.
So some businesses will never pay certain expenses, and other businesses might have some very strange expenses that they have to pay. All you have to show is that, hey, in order for me to run this business, I had to pay for this.
Okay.
And yeah, it's a very generic section.
Okay, so, I guess the answer to that is it is a gray area.
It's a gray area. I mean, it's sort of up to, you convincing the IRS that, well, I had to pay for this renting these trucks, or I had to pay for some utilities or extra insurance, or I had to pay for this travel. All you have to say is it was necessary for me to conduct my business. And there's one caveat there, and that is that the IRS has sort of added to it, and they've said ordinary, necessary, and reasonable. So you might say, well, I had to take out this business associate for lunch.
Right.
Okay.
The meals one is always the interesting one.
So you can say, well, I took them to, Denny's or something.
Right.
You're not going to get an argument from the IRS. But if you say, well, I took them to this expensive French restaurant with $100 bottle of wine, the IRS might say, well, okay, you had to take them out, but you didn't have to spend that much money.
How do you account for donation of old inventory that never sold? So say I'm doing inventory for the year and I pull a big pile of stuff and I'm like, it's not selling. I can't do anything with this. Now I want to take it back to Goodwill.
Well, you can get a charitable deduction, but the charitable deduction is basically going to be what you paid for it.
Got it. Okay.
Versus the fair market value.
Okay.
So that's the general rule. Now, if you're filing some sort of business tax return, like a corporation or a partnership, that's going to be deducted on your business tax return. If you're unincorporated, you're a sole proprietor, for example, self-employed, it's going to be a charitable contribution, but that goes on Schedule A, miscellaneous itemized deductions. And there's a standard deduction that people use these days. It's like, are you married? Okay, well, the standard deduction is roughly $25,000. If you don't have more than $25,000, you're not going to get any charitable contributions.
Okay, got it. What profit amount can you no longer claim reselling as a hobby? So we had this hobby question come up a couple of times.
Okay, there is a specific code section, 183, that deals with hobbies.
Okay.
And the way the law is structured is that if you have income from a hobby, you actually have to report it.
Yeah. But
if you have expenses, you can deduct them, but only to the point they offset the income. In other words, you can't have a loss from a hobby, right?
Okay.
So you can see what the intent here is. Congress and the IRS say, hey, we're not trying to support your hang gliding hobby or whatever else you're doing. And so the question is it a hobby or is it a business?
Okay.
And that can be kind of a little tricky. The law says that, okay, if you make income 2 out of 5 years, well, it's a business. But if you don't make income in 2 out of 5 years, you have to prove it's a business, right? We're not going to automatically accept it. We might call it a hobby.
Okay.
So there's this 2 out of 5 year rule. Now, a lot of people think, oh, I didn't make any money for 3 or 4 years, I'm out of luck. No, that's not the case, right? The 2 out of 5 they're going to give you, if you don't get the 2 out of 5, it doesn't mean that you have to treat it as a hobby. You just have to show them it wasn't a hobby. Okay. And there's been, I'm not going to go on and on here because there's been court cases on this particular issue where, somebody opened a bookstore and, they lost money 9 years in a row, right? And the IRS said disallowed, it's a hobby. And the person came in, they went to court and they convinced the judge that, no, I tried, and people have won on this. But generally speaking, if you just lose a lot of money year after year after year, it attracts attention.
Somebody asked, what are the chances of being audited?
Well, the IRS doesn't want you to know this, but the chances of being audited these days are really, really, really small.
I'm like, how small is small?
Under 1%.
Okay.
So it varies a little bit. If you're a corporation, if you're a partnership, or if you're an individual.
Okay.
And if you're an individual, it depends on how much your income is. Obviously, if you're making millions of dollars, your chance of audit goes up.
Okay.
Over the last 5 or 6 years, for reasons we won't go into, Congress has cut the IRS budget significantly.
Gotcha.
And people have been leaving the IRS. They've been retiring from the IRS. And as a result, they can barely even process your average tax return these days. If you're filing a tax return, first point of advice, do it electronically. Don't do it on paper. The IRS just can't handle paper returns.
Okay.
In years past, at the end of any given year, the IRS had an inventory of unprocessed returns of 5 or 6 million returns.
Wow.
Okay. At the end of 2021, they said they had 35 million unprocessed returns.
Wow.
So if you're filing a paper return, who knows when it's going to get processed.
Gotcha.
File electronically.
Especially if they're expecting a refund.
Oh yeah, if I'm expecting a refund, absolutely I'm filing electronically.
Got it.
Anyhow, the point here is because of this, the IRS is struggling so hard that the chance of being audited, I think in like 2018 or something like this, they release some release statistics every few years, is like 0.44%.
Wow, that's really small. But again, this is not a video that's based on tax advice. So should you be audited after watching this, consider yourself very lucky. You are the 1%. Can you use your personal checking account for sole proprietorship?
Well, you could, but I would absolutely recommend against it. Because you're going to be mixing things up. Things are going to get confused. Okay. You're going to have to sort back through your personal checking account and try and remember, oh, was that for a business item or was that for a personal item? And inevitably, you're going to miss some things. And, in a worst case, you might even shortchange yourself because you'll lose track of business deductions. So have a separate business account.
Got it. Okay, next question. Benefits of being a single member LLC versus sole proprietor.
Well, and I touched a little bit upon this a couple of minutes ago. LLC stands for Limited Liability Company. And LLCs were first kind of came into the law in the 1990s, and the specific reason for them was to provide you with some limited liability.
Okay.
It's like, you can't come after me personally and sue me, you have to sue my business. Okay. Now, you get that same protection by forming a corporation, but anytime you go down the road of forming a corporation, there's money involved with attorneys to form the corporation. There's annual minutes. There's all sorts of things you have to do. You have to file separate tax returns. Corporations are just a heck of a lot more complicated than being a sole proprietor. And I'm not saying they aren't good. It's just if you're really small, you're adding a lot of complication. But an LLC provides you some of those same results with a lot less complication.
Is it necessary to register as a business?
Well, you're going to have to look at your state and local law. But my experience is that most states, if you say you're in business, require you to register. Okay. And it might be just as simple as paying $25 for a local business license or $30 for a local business license. Now, the reason they'd like you to register is, one, they get some fees, and then maybe there's some taxes involved. but I would say in almost all cases, you should be registered as a business. Yeah,
for myself in Washington State, when I registered as a business, then I was able to get my reselling permit.
Right.
Which, again, for myself in my state would mean that items that I purchased for resale, I didn't have to pay sales tax on at the store. Okay, next question. Someone said if you're not registered as a business that there is a 2% floor. Is that true? Does that mean you can only write off up to 2% of expenses?
Schedule A on a personal tax return is what's called personal, itemized deductions. So your medical expenses, your charitable contributions, your mortgage interest, your taxes, they all go on Schedule A. There's a category called miscellaneous itemized deductions. And this is a catch-all category. So it could be some business expenses. It's usually like business expenses of an employee. If I work for a company, maybe I spend some money that the company's not going to reimburse me for. I claim it there. Maybe I had some professional dues, union dues, all sorts of things like that. They went on Schedule A. Well, there was a 2% rule that said in order to deduct those items, those expenses, I can only deduct the amount that exceeds 2% of my income. So if my income's $50,000, 2% is $1,000, I'd have to have more than $1,000 in these miscellaneous deductions to get any benefit. But what's even worse right now is that the 2017 Tax Act suspended all miscellaneous deductions until 2025. But that's where the 2% rule is, but it's not even relevant anymore.
So not true.
Not true.
Your dad said you can estimate the cost of goods for items that are given to you. Is that correct? I have quite a bit of clothes that were given to me. So I should estimate what the cost of each item was, even if I didn't pay for it? They just want clarification.
Well, if somebody gives you something, you take their cost, essentially. So if I bought something for $20 and then I give it to you and you resell it, your cost becomes $20. Okay. So it's the cost of the person who gave it to you, which sometimes can be hard to get. They don't remember, you don't remember. But essentially, you do have some cost. But if you were to say I received something and there was no cost involved at all, right? That person got it for free.
And now they've given it to you for free.
Then you really have no cost at all.
So for instance, I kind of asked you sometimes people live in neighborhoods where people put the couch out on the street or like a printer or a computer and it's kind of just up for grabs. So if you go and grab those items, what's your cost of goods?
Well, it's really zero, right? Because you didn't pay anything for it. So it's zero. Now, let me just, one more point here on the estimate, okay? I know this person is talking about cost of goods, but they're using estimate. If you know you incurred some expenses, but you can't find your records, or it's just hard to put it together, you are allowed to make a reasonable estimate of your expenses. Now, IRS auditors will tell you, no, you can't, but they're wrong. You absolutely can. There's a court case that goes back 100 years called the Cohan Rule. George M. Cohan, a musical composer, filed his tax return, and he couldn't provide records for a lot of his expenses. And the court said, you're a famous person, you're a celebrity, and we believe you that you had expenses, so we're going to give you the expenses as long as you come up with a reasonable way of doing it.
Okay.
So you can estimate expenses using a reasonable basis. But if it's things like free things you've got on the street,
yeah,
it's zero.
Okay. Someone asked, I started reselling in May of 2021. I didn't have $20,000 in sales, so how would I do that on taxes?
I'm not sure where the $20,000 figure comes from.
Maybe it's a rule that they heard, but it's not factual.
Yeah. I mean, if you have 5,000 in sales or you have 55,000 in sales, I mean, it's something you report. I mean, because you might have 5,000 in sales and your expenses exceed that.
Got it.
You're going to have a loss. Absolutely. I'd file a return, claim the loss.
Okay.
So various rules apply, though, when you get to the state level, because there's federal taxes, and then some 42 states or 43 states have a state income tax in addition to the federal tax. And some of those states do have certain rules, like if your income is under a certain amount, you don't have to file a state tax.
Okay.
So maybe they heard something, but it was
maybe that's where the 20,000 comes
possibly.
in. Okay,
Possibly.
so, and if that is the case, or they suspect that is, then they should probably go to the state's website to kind of get more information on that, or
Sure.
talk with a local tax professional in their area.
Good.
Last one I was going to ask, a lot of times people say, how do I find, and I think we maybe touched on this in the last video, but how do I find a good CPA or tax professional, or do I need one? Any last tips or parting words on that?
Well, I think my years of experience, most people who've come to me or to anybody else I know, it's word of mouth. People come to you and say, do you know a good doctor? Do you know a good dentist? Do you know a good accountant?
Yeah.
And so, speak with your friends. Speak to other people who are resellers. So if you know some other resellers, ask them, hey, do you have anybody you could recommend to me? And, that's no guarantee that you're getting like top-notch advice.
Yeah.
But trust the people that you know, right? Maybe your bank, your bank might know some good accountants in the area. They can help you out.
Okay. All right. Well, that's all the questions that we have for you guys. Thank you, Dad, for answering them for everyone. I hope that your question got answered and you are able to walk away with some good tidbits for doing your taxes this upcoming year. So thanks again.
Can I add one thing?
Yeah.
2022 is an unusual year. Okay. Most years taxes are due on April 15th. Everybody knows April 15th.
Yeah.
Right. Taxes this year on a federal level are due on April 18th.
Okay, so we got a few extra days.
Right, because the 15th falls on a Saturday.
Okay.
So they never, they always extend it for a weekend. And so they extend it to Monday. But in Washington, D.C., there's a holiday called Emancipation Day.
Okay.
And so that's a holiday in Washington, D.C. So the IRS says, we honor all the Washington, D.C. holidays.
Great.
So that pushes it to April 18th. And just to complicate things just a bit more, you have to look at your local state. Most states have conformed to April 18th.
Okay.
A couple have said, no, we're going to do it on the 17th.
Oh, okay, the 17th.
The 17th. And then I think Massachusetts has a local, something like Colonial Patriots Day or something. Sometimes you get
So what, now they're at the 19th?
It could be. So check your local state. But for federal purposes, it's April 18th this year.
Okay, so definitely check with your states. And personally, I'm just going to plan for April 15th so that I know I have it done.
Good idea.
And I'll make sure, we'll handwrite it this year just for the IRS, We're not even going to send it electronically. All right, thanks again for watching, everybody. We'll see you in the next video.
Bye.
Bye.